This is Nightly Business Report with Tyler Matheson and Susie Garrett. Brought to you by
TheStreet.com, interactive financial multimedia tools for an ever-changing financial world. Our dividend stock advisor guides and helps generate income during a period of low interest rates. Real Money helps you think through ideas for investing and trading stocks. Action Alerts Plus is a charitable trust portfolio that provides trade-by-trade strategies. Online, mobile, social media. We are TheStreet.com.
Rising rates from mortgages to credit cards to auto and student loans. Why next week's Fed meeting could hit your wallet and hit it hard.
Crude move. If U.S. energy production is at record levels, why are oil prices near 5-month highs? And why aren't we feeling more relief at the pump?
Superhero showdown. As Man of Steel hits the theaters, can he strengthen the Warner Brothers franchise and pull in as much money as Disney's Avengers? We have all that and more tonight on Nightly Business Report for Friday, June 14th.
Good evening, everybody. I'm Bill Griffith in for Tyler Matheson this evening. Stocks ended a volatile week with a triple-digit loss. But the key gauge that everyone is fixated on right now is interest rates. Even with the pullback the last few days, rates have spiked over the last 2 months as Wall Street tries to figure out if and when the Federal Reserve will begin winding down its bond buying program. More clues could come over the next week when the Fed meeting occurs. And when it does come to rates, the big one for most people is tied to their homes, with the 30-year mortgage right now right around 4% and trending higher. Just who do rising rates hurt, and will they slow the recovery? Diana Olick takes a look tonight.
Anyone who bought a home 10 years ago knows today's mortgage rates are a huge bargain, but rising rates are still spooking the market.
I'm starting to see actually some of the first-time home buyers start to realize this is the time to get into the market.
The 30-year fixed conforming loan hit 4.15% last week, up from 3.59% at the beginning of May. That's a 14-month high. While that has pushed refinance applications down 36% in a month, purchase applications fell just under 2%. Some home builders are actually seeing sales gains.
It's the equivalent of a price increase. It creates urgency. Right. We're actually seeing more sales now because rates are beginning to creep up very slowly. And if that continues, and if we stay in a manageable range, we'll be fine.
And rates mean nothing to a large segment of today's buyers. 32% of buyers in April were all cash, up from 29% a year ago. No mortgage at all. And that's April, before rates really started to spike in May. These buyers are keeping the distressed end of the market going. 1/5 of April buyers were investors who, again, largely used cash. Take California, for example, a big investor market where sales are now surging. The typical mortgage payment that home buyers committed to last month was $1,227. That was up from $1,006 a year ago. Adjusted for inflation, last month's typical payment was still 47% below the 1989 peak and 57% below the latest 2006 peak. So, who do rising rates hurt? First-time buyers, who accounted for 29% of home purchases in April compared to their usual 40+%.
We might see some buyers have to lower their expectations.
The trouble is, mortgage rates are rising right along with home prices. Not a great mix. Buyers are losing spending power, but on the flip side, potential sellers are gaining home equity, allowing them to move up. It begs the question, does it all even out in the end? For Nightly Business Report, I'm Diana Olick in Washington.
Well, not only are mortgage rates inching up, any increase in the benchmark lending rates could lead to higher interest rates on car loans, credit cards, student debt, and more. Hampton Pearson explains.
Americans will run up nearly $47 billion in new credit card debt this year, according to a new study from CardHub.com.
I pay my bills all the time, for that one card on time, all the time, and always more than the minimum payment, and I cannot seem to pay it off.
Economists say if higher interest rates are coming, consumers will feel it first on those unpaid credit card balances.
The biggest worry for consumers is likely on their credit cards. That's where you're going to see rates move up probably fairly rapidly if rates continue to rise, which is a big if.
Low interest rates have made new cars more affordable. Auto sales were the biggest factor in better than expected retail sales in May, up 1.8% according to the Commerce Department. with concerns about higher borrowing costs fueling some of that demand. But leading economists say the auto industry will continue to offer creative financing incentives.
What's most important to them is not the size of the loan, but what their monthly payment is and how they can manage their monthly payment. And anything the auto industry can do to minimize that monthly payment has been able to sell a lot of cars.
On Main Street, interest rate concerns are not sparking anything like the market anxiety we saw on Wall Street this week. The one exception, college students and their parents worried about repaying all those loans.
You do want to get out of debt quicker. Nobody wants to have the feeling of actually having to owe somebody anything. So with student loans being as expensive as they are, I want to get them out of the way as quick as possible.
The one silver lining for consumers, gasoline prices are lower than they were at this time last year. As one person we talked to said today, we'll take anything we can get. For Nightly Business Report, I'm Hampton Pearson in Washington.
And as we mentioned earlier, stocks ended a volatile week to the downside again today following a decline in consumer confidence for June, industrial production that was flat in May, and a surprising 0.5% increase in producer prices last month, mostly on rising food and energy costs. After 4 days of sizable losses this week, all three of the major averages ended lower for the third week out of the past 4. Today, the Dow lost 106 points, but still somehow managed to close above that 15,000 level. The Nasdaq was down by 21. The S&P 500 was off by 9 points. As for Treasuries, the yield on the 10-year fell slightly today, 2.13%. after hitting a 14-month high on Tuesday.
Meanwhile, foreigners have been bailing on U.S. Treasuries since before the market top. The Treasury Department says that private overseas investors sold out of a record $30 billion in Treasury bonds and notes in April, and foreign governments dumped an additional $55 billion.
And that kind of pessimism is now resonating at the International Monetary Fund. The IMF said today that higher payroll taxes and cuts in U.S. government spending have posed downside risks to the country's economic outlook and will likely shave about 1.5% off U.S. growth this year. Those cuts, part of the sequester legislation that kicked in on March 1st, led to more federal worker furloughs today, including another unpaid one-day shutdown of the IRS, Housing and Urban Development, and the EPA and the Office of Management and Budget.
Motor City edged a step closer to the largest municipal bankruptcy in U.S. history today by failing to make payments on $2.5 billion in debt. The state-appointed financial manager for the city of Detroit also has creditors, including unions, pension trustees, and bond insurers, to take about 10 cents on the dollar of what the city owes them. Today's default was designed to save cash to pay for police, fire, and other city services.
Meantime, crude oil prices in the futures market settled at a 5-month high, up more than $1 a barrel today at $97.85. Prices have surged nearly 2% just this week. Traders say the reason for the price spike is the political turmoil in Syria. Although it's not an oil exporter, the landlocked nation is surrounded by Mideast hotspots like Iraq, Turkey, Lebanon, and Israel.
John Kilduff says get ready for higher oil prices and to pay more at the pump. He's founding partner and an oil analyst at Again Capital. John, great to have you here with us.
Good evening.
You know, I just don't get this. We've been hearing for a while now all of these reports about the U.S. is getting close to energy independence. We have record oil supplies. You'd kind of expect a price break. Why are prices going up?
Well, it's a reminder that the best we can probably hope for is energy self-reliance and not independence. It's a global market. And what we're finding out today is that if you string together all the problems that you just related to us all, production problems, that is, within OPEC especially, about 2 million barrels per day are offline. Whether it's Libya, some of the African countries, and the embargo on Iran, it all adds up to tipping the balance globally to a tighter market rather than an oversupplied or even glut situation, even though we have record inventories here in the United States.
There are those who say that some of the price increase we've seen is attributable to speculators in the oil market. They're pushing the price up beyond what it should be based on supply and demand out there. Is that the case?
Yeah, well, I guess if there weren't riots in Turkey where half of Iraq's exports go through, or if there wasn't a potential conflagration here over Syria between the U.S. and even Russia as a proxy war, then the speculators would have no reason to go in and buy up the oil they can now to avoid the rush. So, there's a rationale behind why traders do what they do. The diminution in output, the 2 million barrels that I just went through, it's real. And demand is sufficient enough out there that that's what we need. We need those 2 million barrels to push the prices down to the 80s and 70s where they could go. Well, we were this close, I think, to sort of having a real price break, but because of what's gone on, yet again, it didn't happen.
Tell us what we can expect to pay at the gas pump. Noticing in the northeast area here around New York, it's getting close to $4 a gallon. What are you seeing in different parts of the country? Well,
that's the other irritating factor, I think, for U.S. consumers, is that we have all this oil now, and we may be in the process of trading our crude oil addiction to an imported gasoline addiction. We've closed a slew of refineries on the East Coast. A number of others have been through extended maintenance, so the people in the Midwest have been paying unbelievable amounts for their gasoline, $4.50, sometimes $5 a gallon.
Really? Already at $5?
Already pushing $5, and that's a result of one major refinery in Indiana that's been going through an extended maintenance period. European refiners right now are in an extended shutdown, getting ready for a big ramp up in August, thankfully. But in the short term here, into July 4th, look for that national average to get back up towards $4 a gallon.
Do you ever expect more refineries to be built? When was the last time we had a refinery built in the United States?
I think you have to go back to 1970s, Bill, early 70s. Now, there are some smaller teapot refineries on the board to process some of the shale oil in North Dakota and some of the other places more locally.
Right.
So you can be less reliant on pipeline getting it up to these regions. So we may see some of that. But other than that, no, they're closing. They're closing in Europe. They're closing here.
Because it's not profitable.
It's not profitable. And the industry is going through a rationalization like we've seen with the airline industry.
All right.
Too much overcapacity, believe it or not.
John, thanks for coming by.
Thanks, John.
Great seeing you.
Same
Have a
here.
great weekend. And John Kilduff from Again Capital. And still ahead on the program, if you build it, they will come. So China built homes, lots of them, but so far no one's coming. We'll tell you why. But first, let's get a check on how the international markets closed today.
Well, the rivalry between Boeing and Europe's Airbus to build the biggest passenger jet ever ramped up a bit more today. At next week's Paris Air Show, Boeing will reportedly outline plans to build an even bigger version of its massive 787 Dreamliner jet, the new one that can hold 323 passengers. Meantime, after years of delays and billions in development costs, rival Airbus launched its newest wide-body aircraft in France today. Airbus claims the A350, with its upturned wings, is 25% more fuel efficient than comparable planes, taking direct aim at that Dreamliner.
Also flying higher these days, confidence in banks. According to a new Gallup poll, Americans are more confident in U.S. banks than they've been in 5 years. Now, the poll gives no clear reason for the boost in confidence, but suggests the uptick stems from the high scores banks got on stress tests conducted by the Federal Reserve right after the financial crisis.
There's talk of a cable company deal, but it's just talk so far in Market Focus tonight. CNBC reported that Charter Communications, looking for acquisitions, made an overture to Time Warner Cable, but the Time Warner said it had no interest in a deal. Shares of both companies surged on heavier than normal volume. Time Warner was up more than 8%. Charter touching a new all-time high. It gained more than 5%. And Dow component American Express led the financials lower as a Barclays analyst lowered his rating to equal weight from overweight, saying that future growth potential is held back by slower revenue growth. Barclays raised its price target to $82. Amex shares dropped almost 3%. It closed at $72.97.
Elon put itself up for sale. This Irish drug company is trying to fend off a hostile takeover by Royalty Pharma for $13 a share. Investors are hoping this turns into a bidding war at a higher price. Shares of Elon gained more than 8% on heavy volume, closing at $13.66. And some worries about the future of Monster beverage. The American Medical Association is expected to recommend this weekend a ban on high-energy drinks to anyone under the age of 18. Investors decided not to wait for the news and sold the stock. Monster beverage down almost 4.5% to $59.26.
Well, our market monitor tonight says the stock market will go through a sideways, sloppy correction this summer. He's Michael Jones, Chairman and Chief Investment Officer at Riverfront Investment Group. And Michael, we sit here with the Dow Jones Industrial Average 3% below its all-time highs. We've had something of a correction of sorts, but you think there will be more coming, don't you?
I do. You know, a 3% correction, given the strength of the uptrend in this market, that would be absolutely the minimum of the kind of pullback we should expect. However, given that the Fed is pushing a lot of quantitative easing into the market, we might have a shallower than normal pullback, and we might work off some of the overbought sentiment by simply being sloppy and sideways throughout the summer.
And how much of a correction, Michael? How big?
You know, I wouldn't be surprised if, you know, we limit like the downside, say, for example, on the S&P 500 to, say, 1,600, you know, which would be a very shallow, modest pullback by historical standards. And the motivation for that, you've got the Goldilocks economic environment. You got recovery in autos and housing being offset by fiscal drag out of Washington, and thanks to that, you keep the Fed printing the money.
Well, let's talk about what you would do to protect yourself or those investments that you feel are attractive right now. You've got the SPHB, the Power Shares ETF right now, yes?
Absolutely. Yeah. When we look for value in the marketplace, we go shopping where other people don't want to go. And if you think about where investors have been very comfortable in this bull market, it's been in the stable business model, dividend-oriented names. And on our model, those are 30 to 35% overvalued. Go to the opposite end of the spectrum, you look at the very volatile industrials, technology, the oil exploration and production. Those names are 35 to 40% undervalued, and as the economy stabilizes, we think investors are going to return to those names. Okay. Now, you can do stock selection there, but given the risk, we think bundling them into a single ETF is the best way to play them.
Now, you have a couple of individual stocks you want to talk to us about. Let's start with Discover Financial, DFS, on the big board. Why do you like this one?
Well, we like this one and, largely because it's got a hidden gem. In addition to the well-known credit card component of their business, they are also one of the 3 players in the payment processing business. So you've got the bank networks, you've got American Express, and you've got Discover. And Discover is taking market share from the banks and American Express faster than anyone else. They've signed an agreement with PayPal that gives them a tremendous opportunity for growth over the next several years. And in addition to that, they're a balance sheet lender. And as the economy stabilizes, those credit card balances grow, and so do their earnings.
Quickly on Agilent Technology, Michael.
This is the old Hewlett-Packard, the one that Will Hewitt founded in the 30s. They have great exposure overseas. They messed up a bit, maybe overpaid on their Dayco acquisition. With their most recent earnings, it sounds like they've turned the corner there, and we think there's a lot of upside and some catch-up potential.
Any disclosures to tell us about on those?
I invest in all of our portfolios, and that means I own every one of these names in my personal accounts.
Very good. Michael Jones, Chairman and Chief Investment Officer at Riverfront Investment Group. Thanks for joining us tonight.
Thank you.
China's been going through a construction boom, building rows and rows of luxury apartments and office buildings for its huge population. But sometimes the building was in the wrong place. As Eunice Unit reports, those urban hotspots are now looking more like ghost towns.
If you wanted to build a housing project 10 times larger than New York Central Park, this is what it would look like. In the Chinese city of Chongqing, authorities are spending billions to erect hundreds of thousands of new apartments. The idea, if they build it, the masses will come. We're not worried about a housing bubble, this government official says. We need more homes. China is constructing new homes as part of its aggressive push to build out its cities. By 2025, China's projected to have 200 cities with over 1 million people each. Compare that to the U.S., which only has 9. The move is meant to raise incomes here and create a bigger consumer class. But the concern is that there's a mismatch in investment, potentially littering China with uninhabited ghost towns.
In many cases, that there isn't such a huge demand there. And so you build this huge infrastructure there, but with little used. And so that's going to be a huge waste of the public money.
Only 10 years ago, this area used to be all farmland, but today it's part of the largest public housing project in China.
This country is constructing 36 million new subsidized homes. Even so, new city slickers like this one in Beijing still can't afford to buy one. No matter where you go here, she says, housing is expensive. With so many empty apartments, concerns are rising all the building could lead to a local debt crisis. Yet many argue the fears are overblown.
Local officials have a lot of power in their hands. They can look at how cities are growing and how the economy is growing, and they can try to build ahead to satisfy demand ahead.
A reminder that in this authoritarian state, if you build it, you can force them to come. For Nightly Business Report, I'm Eunice Yoon in Chongqing.
Coming up, if you were watching yesterday, and I know I was, you saw George Lucas and Steven Spielberg say that one day you'll be paying a whole lot more to see a movie. Well, guess what? That day has come. But first, how commodities, treasuries, and currencies fared today.
Lululemon, the upscale sportwear chain that has won over millions of women with its high-priced yoga gear, now plans to open up stores just for men. The chain may be best known for the costly recall recently of some see-through women's yoga pants. So the big question, will men dare to buy Lulu's athletic wear?
My wife does buy some of the stuff. It just doesn't seem very manly to me.
In the unisex store, I feel like I'd have a better chance of meeting women, so that would probably work out better for me.
Now, earlier this week, a Lululemon CEO resigned because of that embarrassing recall. And today, the company posted a rather quirky ad for a new chief executive on its corporate website. Candidates for the, quote, head boss person will often need to communicate through Sanskrit, be able to hold a headstand for at least 10 minutes, and have a plan to bring yoga to Mars within 5 years. Later, the company issued a statement saying the post was just for fun. And finally tonight, when director George Lucas told NBR viewers last night that the price of going to the movies may soon hit $50 a ticket, many people found it hard to believe, including us.
What you're going to end up with is fewer theaters, bigger theaters, with a lot of nice things. Going to the movies is going to cost you $50, maybe $100, maybe $150.
Like Broadway costs today.
Yeah, it's like Broadway or going to, a football game.
But you know, it happened sooner than even he likely thought. Paramount Pictures is already offering $50 tickets at 5 select screenings for the new movie World War Z, starring Brad Pitt. You get to see the movie 2 days before the premiere, a movie-sized poster, custom 3D glasses, and an HD stream of the movie. And guess what? A small popcorn bill. Does it make sense to you, $50, or wait for the DVD?
I'd wait for the DVD for a lap, unless Brad Pitt was there to shake my hand for that $50. I remember going in college, taking a young lady to see Apocalypse Now, and I flinched when I saw that the price of the ticket had gone up to $5 per ticket.
You're dating yourself, Bill.
Yes, I was, but it was worth it that night.
That's Nightly Business Report for tonight. I'm Susie Garib. Thanks for watching. And to all of the fathers out there, have a happy Father's Day. You too, Bill.
Thank you. And from me as well, I'm Bill Griffith. Be sure to log on to our website, nbr.com. Have a great weekend.
Nightly Business Report has been brought to you by
TheStreet.com, interactive financial multimedia tools for an ever-changing financial world. Our dividend stock advisor guides and helps generate income during a period of low interest rates. Options Profits helps educate beginning and seasoned options traders. Action Alerts Plus is a charitable trust portfolio that provides trade-by-trade strategies. Online, mobile, social media. We are TheStreet.com.
I'm Susie Garrett with the Nightly Business Report News Brief. Stocks ended a volatile week to the downside again today, following a decline in consumer confidence for June, industrial production that was flat in May, and a surprise increase in wholesale prices last month. The Dow lost 106 points, but still closed above the 15,000 level. The Nasdaq was down by 21, the S&P off by 9 points. Oil prices rose to a 5-month high to nearly $98 a barrel on worries about the unrest in Syria. The city of Detroit failed to make payments on $2.5 billion in debt. Boeing says it plans to build an even bigger version of its massive 787 Dreamliner jet that can hold 323 passengers. And yoga wear retailer Lululemon says it plans to open up stores just for men. Be sure to tune into Nightly Business Report right here on your public television station.